What's up, guys? This video is meant to be a step-by-step playbook for anyone who's buying real estate, for buying a primary home in the LA market in 2019. Now, everybody seems to have a story, whether it's, your parents, your relatives, friends, colleagues. They all have a story about when they purchased real estate. And I'm not saying that their story is wrong. I'm just saying, hey, is their particular story and situation the same as yours? And probably not, right? I guess it's fair to say that. So allow this video to kind of clear the air, to kind of cut through all that noise and doubt, so that when it is time for you to buy a primary home, to buy real estate in LA, you're ready to make confident real estate decisions. Hopefully this video is able to do that for you. Now, before we jump into the entire step-by-step playbook, I want you guys to know about our companies. They are First Quantum Realty and New Option Mortgage Inc. My dad's been in the business since 1992. I was just 2 years old when he started his career in real estate. And my siblings and I, we grew up in the business. We had various small roles growing up, such as helping out with the open houses, going on food runs, paper filing, janitorial duties. Things of that nature. So we grew up in the business. But yeah, that's us. Very small, humble family company, but we do a kick-ass job when it comes to helping people buy and sell homes and with their mortgage. Now, this video is gonna be a little bit longer than some of the other videos that I've posted on my social media platforms, but that's because I wanna be as thorough as possible in regards to this video, because I think it's a super important topic to cover. I want to make sure I'm as thorough as possible, and you guys are investing time watching it, right? So I want to make sure that you guys, during this, however long this is going to be, I want to make sure you guys maximize your time and actually take away something from this video that you can hopefully apply in real life. All right, guys, that's the purpose of this video. So if you have not already, you're going to want to hit that like button, because it's going to help the engagement. It's going to help the YouTube algorithm say, hey, this is a good video. And I really want to reach as much people as possible so that they can share this with their friends. And, hopefully they can also apply this to their particular, life when it's time to buy real estate. So yeah, hit that like button if you haven't already, or you can leave a comment below.
That would be great.
So let's start with the all-important, not to be ignored, pre-approval process. Guys, the very first step when it comes to searching for homes is to get pre-approved. You want to be able to see everything as objectively as possible to make sure you're okay with the monthly payments. So let's say you're approved up to $700,000. You can buy a home worth up to that point, and then you'll see the corresponding monthly payments. Even though you're approved for $700,000 doesn't mean you have to go there. You can even go lower. It's up to $700,000. So if you're comfortable with the monthly payments at $500,000, then that's your budget. It's very important to understand that early in the process, because what we don't want happening, and this does happen, is people look at homes and they get pre-approved, right? But they fall in love with that home that they saw, and then later they find out they can't afford it, and that's just heartbreaking, and it does happen. And if you're buying in the LA market in 2019, what you're gonna find is there are a lot of buyers, but not a lot of homes for sale. We're in a low inventory market. If there's one home in the community that you're interested in, if there's just one home there and there's 10, 20, 30 buyers, what's gonna separate you as a potential buyer from the rest of the people out there? And pre-approval is one of them. Now, our mortgage company is associated with Quicken Loans. We are Pinnacle Club members, and all that means for you is we do a great job when it comes to helping our clients with their mortgage needs. Whether it's buying real estate, refinancing the current mortgage, whether it's a cash out or a refinance on the terms or whatever it is, we do a great job at doing that. And the reason why I bring this up is because of the pre-approval letter, right? Since we're associated with Quicken Loans, our clients have access to what's called the Verified Approval Letter. The Verified Approval Letter, shortened VAL, is the closest thing you can get to an all-cash offer. And for those who are unaware, sellers are almost always gonna choose the all-cash offer. So if we can get really close to that, or if you are an all-cash offer, that would be ideal. And the reason why I bring this up is because let's say you are going into a multiple offer scenario for that one property, and the seller is comparing a regular pre-approval letter, which is completely fine, by the way, and our verified approval letter direct from the lender, close to an all-cash offer. What do you think the seller might be leaning towards? That could potentially be the difference between you getting the house and you losing out to the competition, right? In a low inventory market, you want to make sure that you're doing everything you can to work with your agent to drop a very competitive offer to make sure you're beating out the competition, and the VAL is one of that. And that's just one of the benefits of working with New Option Mortgage. We're highly accessible, we have competitive rates, the whole shebang.
Cheap banks! Cheap banks!
So what is needed to get pre-approved? How do you get this pre-approval letter? Well, you speak with a lender and or a mortgage broker. Normally what they're gonna request are W-2s, pay stubs, bank statements. If you have any other properties, you're gonna have to submit that, and a credit report. Having good credit is really important when it comes to purchasing real estate. And if you look at it in the eyes of a lender, the people who are letting you borrow money, if you have low credit, that person is high risk. They're less likely to pay them back. They're more likely to default on the loan. Conversely, high credit. High credit is lower risk because these people with high credit have proved that they can pay people back. So they're gonna wanna work with people with high credit. Now, 580, that's like the very bottom. There are some programs out there if you have a 580 credit score, but you really wanna start at the minimum at 620. Ideally, if you really wanna reap the benefits of all the programs out there, all the rebates and so forth, you really want to be in the 7 and above club. 700, 720, 40. At 760, that's when lenders start throwing money at you. Okay, not literally, but you get the point. That's when all the best rates come out. They help you with closing costs, down payment, etc. Right? That's when the lenders really want to work with you. Make sure that you're aware of where your credit score is, because it's really going to be important. Our clients have access to what's called the Fresh Start program. Basically, if you're at 680 and you need to get to 720 to reap all the benefits of being a first-time home buyer, better rates, better rebates, etc., we can provide you a blueprint of exactly how to get from a 680 to a 720. And that's super powerful because at 720, you'll probably get better rates than if you were at 680. So definitely be aware of where your credit score is, so that, let's say you're starting to plan today to buy a home, right? But you realize, hey, it's gonna take us 2-3 years to save up for down payment, closing costs, build our credit. At least you're gonna have a blueprint. You know where you're going. You know what the end goals are: down payment, savings, closing costs, etc., right? So now you can work towards that. Don't forget about your credit. Now let's talk about the all-important down payment. So down payment, how much does a person really, really need when they buy a home? And this takes me back to step one. It really depends what you get pre-approved for. And that's why we have that as step one. It's super important. The majority of our clients fall into one of two categories: FHA and conventional. Now, FHA is a little bit more lenient when it comes to qualifying for this type of loan. Lower credit scores, lower down payment, and it's typically cheaper to close. If you qualify for a 3.5% FHA and you're looking for a $500,000 home, that's around $17,500. Just like any loan product, there are pros and cons. 3.5% is great, but what are the disadvantages of going with an FHA? FHA is an awesome program. I'm not saying it's bad and you shouldn't go with it. I'm just saying be aware of the pros and cons of each loan scenario that you and your lender and or mortgage broker discuss. So the negatives for the FHA would be, in the eyes of a lender, right? Again, thinking about in the eyes of a lender, this person has lower credit score typically, so they're higher likely to default. How does the lender protect themselves because this is a higher risk borrower, right? And so that comes in the form of private mortgage insurance, also known as PMI. That additional cost gets added onto your monthly mortgage, and that makes a big difference sometimes. And another drawback of an FHA is typically it's going to be higher interest rates. There are city county limits to how much of an FHA is allowed. So you can't just go into Beverly Hills and just, hey, I want to buy this $10 million home because at 3.5%, I got $350,000 I can play with. It doesn't work like that. There are county city limits, so definitely check that out, or ask your mortgage broker and/or lender about the limits of certain areas. Conventional loans are a little bit harder to qualify for. You need definitely a stronger income. You need to make a little bit more money, higher down payment, and higher credit. So if you qualify for a conventional loan on a $500,000 home, the minimum down payment is 5%. Now there are programs with 3%, but most of our clients opt for the 5% or more. So I'll use the 5% example. 5% of $500,000 is around $25,000, right? So that's a $7,500 difference in down payment costs compared to that of the FHA loan. Now the question becomes, which one is better? And honestly, it depends on you and what you discuss with your lender and or mortgage broker. Are you willing to have a lower down payment, but you're okay with the higher rates? Or do you want to save up a little bit more for your down payment and have lower rates? That's a personal decision that you have to discuss with your lender and or mortgage broker. Make sure everything's on paper before you move forward. And just because you get pre-approved, by the way, doesn't mean that you're locked into anything. It just means we're getting everything on paper. Guys, it's about creating a blueprint for the next 2 or 3 years sometimes. We get people pre-approved and they're just not ready, and that's totally 100% okay. As long as they're able to make confident real estate decisions, as long as they can look at everything on paper and make good decisions. There's no rush. So don't be afraid to get pre-approved or speak with a mortgage broker and or lender. Now, some people are very high salesy, high pressure. You don't have to work with them, right? There's no pressure, there's no obligation. Work with the people that you trust. All right, so pre-approval check, down payment check. When do you buy, right? How do you time the market? And the answer is, you really don't, but we can talk in a general sense. In general, the best time to buy is around spring and summer. That's when inventory is high. That's when a lot of buyers are out. That's when a lot of sellers are selling their home. But at the same time, that means competition is high. A lot of buyers are out looking at homes. You're competing with those buyers. Generally, winter is not the best time to buy. That's when inventory is low. That's when people are staying put. People are staying in for the holidays. But an interesting fact, during my time in real estate, I found that the best deals usually come in winter, right? At least in our LA markets. Take a look at people who are selling homes in the winter, because if you think about it, instead of staying in for the holidays and spending time with family, they're selling a home. So what's the deal there? So definitely explore winter as a time to potentially go home hunting. See if you can find a deal out there during winter. Should you wait until the market crashes? And man, if I could predict the market, I'd be a whole lot richer. There are experts who spend their entire careers trying to predict the market, but the answer is no one really knows. No one knows when the market's going to crash. Sure, there are definitely trends. Nobody knows when the market is going to turn or whatever. My advice when someone asks me, should I wait till the market crashes? My answer is nobody knows, and don't worry too much about timing the market, because if you think about it, in my personal opinion, real estate is a long-term investment. So if you look at it in that sense, timing the market isn't that important, because if you buy today and the market crashes tomorrow, you're just going to ride that wave anyway until the market gets better. At the same time, if you buy today and the market goes up, then cool, good for you. You just got some equity in your home. So my answer is the best time to buy would be when you're financially ready and when you find a good deal on the market. And I go back to this because it's so important, but speak to your lender. Get everything on paper, have a blueprint so that you can be a successful homeowner. To me, that's more important than timing the market, because no one really knows when the market's going to shift, when it's going to crash, when it's going to go up. So let's talk about the house. What do you really need in the house, and what's nice to have? And getting very clear on this is really, really important. There is no perfect home. During our consultation that I have with my client buyers, I ask them very important questions, very simple questions, but very important questions. And one of those questions is, what do you absolutely need to have in the home that you're gonna buy? So think about things like, where does the home need to be located? What school districts do you need to be in? Do you need to be next to a Target? Do you need to be next to a Starbucks? You need to think about these things. It's very important. So having a clear sense of exactly what you're looking for, what do you absolutely need in the home, is really important. That's gonna really save you some time, money, and frustration when you're looking at 10, 20 homes. It could get quite frustrating. In my personal opinion, real estate investing, buying a primary home, that's a long-term investment. At least in my opinion, that's the way to go about it. So it's okay to buy a slightly outdated home. As long as the bones are good and the house isn't gonna fall down, then you can slowly make it yours as you own it over the years, right? That's totally okay. Should you use an agent when you're buying a home? Now, I'm a real estate agent, if you guys haven't already noticed, so probably asking me wouldn't be the smartest thing to do for this question. I'm gonna do my best to give an unbiased answer. And to answer this question, let's think about exactly how commission works. Imagine for a second, I'm a homeowner and I wanna sell my house. I'm gonna hire an agent to sell my house. And at that point in time, when we have that conversation, we're gonna discuss how much I'm gonna pay my agent and the agent that brings the buyer. So essentially the seller is paying for both commissions. So using that logic, using that thought process, as a buyer, I typically am not gonna pay the agent that's representing me exclusively in the purchase. So why not hire an agent to protect me and my best interests, right? I want to express my frustration a little bit because not all agents are created equal, and I believe a lot of realtors would agree with me on this. There are some people who treat this like a hobby, and there's a good handful that treat it like a career. And I believe, in my personal opinion, if I'm representing someone and potentially their most expensive investment in real estate, right? I feel like it's my responsibility to make sure that I am helping my client by always investing in my own knowledge base, that I'm always out there learning about the new laws, new practices, learning everything about the industry, because I need to bring all that information back to my client. If you're a part-time real estate agent, it's really difficult to do that, to have 2 jobs, 3 jobs. For me, it's disservicing the client that he or she is representing. So this little bit is for my fellow colleagues, my fellow realtors out there. We have got to be better, guys. If we want our profession to be taken more seriously, we have got to be better. Because here is the truth. There are good realtors out there, fantastic realtors. Good realtors invest in their own education, their own knowledge base, so that they can bring that back to their clients, so that they make sure that their clients are protected. Good realtors can educate their clients about market conditions, such as days on market, market trends, sales to list price ratio. Good realtors are empathetic and they're very understanding about their client's personal situation. It's more than a transaction to these realtors. It's about the relationship that they have with their clients, even after, or even if the deal doesn't close. It's about the relationship that we can build with our communities. These are the realtors that you want to hire. Now, unfortunately, not all realtors are created equally, and there are unfortunately bad realtors out there. Bad realtors care more about the transactions that close than the relationships they have with their clients. They treat it like a hobby, and for me personally, these are not the agents you want to hire. These are not the agents you want to represent you. So the moral of the story is hire slowly. Take your time to interview different agents and see which ones are full-time, active, empathetic, someone you can really, really trust. I think that's super important than just hiring very quickly and just hiring the first realtor you see. Everyone has a real estate agent in their family, circle of friends, or your colleague is doing it part-time or something like that, right? It seems like that's very common, but don't just hire Uncle Phil or Cousin Bill because they have their real estate license. Don't just hire them because, hey, I'm a real estate agent, you've got to use me or else. That's not the type of agent you should be hiring. Hire someone who's full-time agent, who's practicing real estate actively, who treats it like a career. Because guys, a 1% mistake on a $500,000 home is $5,000. And mistakes can happen in real estate if the agent is careless and they're not protecting their client. So hire slowly and hire well. So to answer the question, should you hire an agent? My answer would be yes, absolutely hire an agent, especially if you're leaning towards that first-time home buyer. Maybe you bought 1 or 2 or 3 homes in the past. Perhaps that's not enough for you to do it on your own. Typically, you're not paying the agent anyway. So why not have someone in your corner fighting for you? If you are a full-time investor or you're leaning towards that end, maybe you can skip out on the real estate agent. You, as a full-time investor, know exactly what dangers to look out for in a transaction. You've made mistakes in the past, you know not to make it again. So these are the people who probably, maybe you don't need a real estate agent by your side. Should you go direct to the listing agent? Remember, the listing agent is the agent representing the homeowner selling their house. So should the buyer go directly to that agent to represent both sides, essentially, in the transaction? Now, if you look at the agency disclosure describes the relationship that the agent has with their client. If you look at it, they are protecting their client's best interests. And in the case of a homeowner, typically, in general, in most cases, the agent is trying to sell the home for the most money as quickly as possible and with the best terms, conditions. So just using logic, would it be smart for a buyer to use that same agent? Probably not. But James, there's this thing called dual agency. Yeah, that exists in the contract, but I'm not a big fan of it. Even when we're selling homes with our company, I would rather hire someone else in my company to represent the buyer. Because guys, I'm representing my seller. That line is very, very, very clear for me. I'm representing my clients, my seller's best interests. When a buyer comes to me and says, hey, represent me also, sure, I'm gonna get paid more money. But now that line starts becoming very blurry. So I'd rather have someone in my office. I'll say, hey, Joe, can you represent the buyer in this home that we're selling? That line stays clear. And for me, I can sleep better at night knowing that line is very clear. Guys, I don't care about the commission as much as I do about the relationship. So to answer your question, to answer this question, yes, absolutely hire your own agent to represent you to purchase real estate. Try to avoid going directly to the listing agent. Get someone who's going to fight for you in your corner to make sure that line stays very, very clear. Guys, I am so proud of you. You guys made it this far. That means you are a trooper and you're very serious about investing in real estate in the future. That means you really want to make confident and awesome real estate decisions when it's time for you to buy real estate. So if you haven't already, click that like button, hit subscribe, or leave a comment so that I know you guys made it this far. We're almost at the finish line. I can see the light. How long does buying a home take? All in all, we're looking at on average, between 2 and 3 months of the entire process. I would say about 30 to 60 days, about a month or 2 of actually actively looking for a home, and an additional 30 days of escrow. So the clearer you are on the type of home that you want to buy, the shorter the hunt typically is. Now, the more ambiguous you are in terms of, you don't know what you want in the home, the longer this process can take, and the longer it takes, the more frustrated you can become. You found the home. What do you do now? You make an offer. Now, making an offer, that's when having a solid, local, knowledgeable, and experienced real estate agent really helps. Let's say there is a $500,000 home on the market that you are absolutely interested in. In the LA market, chances are other buyers are also looking at that particular home. So let's say we're in a multiple offer scenario, which is very common. It's a $500,000 home. Other buyers are saying, hey, here, $510,000, $515,000. You get the point, right? But what if the price isn't necessarily the most important thing to the seller? What if the seller just wants to close in 21 days instead of 30? What if your agent had the initiative to call the listing agent to ask, hey, what's important to your seller? What do they want that my buyer can provide? What if your agent did that? Having a very solid real estate agent is able to create win-win situations in transactions. For one party to win, the other doesn't necessarily have to lose. We just have to meet somewhere in the middle where everyone's happy. So in this scenario, hey, if my client offers list price $500,000, but we can guarantee you that we're going to close within 21 days, now you're paying, as a buyer, fair market value for the property, $500,000, and you're going to close in 21 days. That's a win-win situation. You're not with the other pool of buyers who are thinking that the list price was most important to the seller. The moral of the story is call the listing agent to find out what's important to the seller. Find that information out. You as a buyer, hey, what can I give to the seller while still being happy? Of course, not all situations are going to be like that. Most sellers are going to want to have at list price offers or even above asking price. So it's important to have a real estate agent help you draw up the contract that has good offer price, make sure you're not overpaying for the home, good terms and conditions that protect you as a buyer, make sure all the contingencies are in place to protect you as a buyer. Your agent should advise you on market trends such as days on market, sales to list price ratios, median sold price, things of this nature, so that you can drop a very strong offer that's reasonable for you as a buyer, but still reasonable for the seller. During this process is, in my opinion, once you open escrow, that's when hiring or having a really good real estate agent in your corner really helps. Speaking of contingencies, your agent should advise you on contingencies, because when your offer is accepted, you have to submit what's called an initial deposit or earnest money deposit, which is 3% of the purchase price. If you as a buyer don't follow the contract, if you breach the contract, you may lose that EMD. 3% of a $500,000 home, that's a lot of money. Make sure your agent is advising you on all of the contingencies that are in place in the residential purchase agreement. That's the contract that you're going to send over to the seller and their agent. Now, one of the contingencies that are really important, all of them are important, but one of them is subject to appraisal. If you're going to take out a loan to purchase this property, the lender is going to ask you to hire a professional appraiser to evaluate the price of the home, to make sure that the money that they're letting you borrow is appropriate. That appraiser is going to go out to the property, appraise the home, and say, hey, here's the report. This is how much this home, in my professional opinion, costs. So a lot of people get afraid of overpaying for the house. That contingency is there to protect that. It's subject to appraisal, meaning if I get the house appraised, I offer $500,000, but the appraisal comes in at $450,000, we can renegotiate the contract and say, hey, it appraised at $450,000, you guys have to come down in your asking price. Conversely, if it comes in at $550,000, the appraisal, and they listed it at $500,000, you don't have to say anything as a buyer. You don't even have to show the report. The listing agent and the seller just mispriced the home, and you have some equity in the home at the time you close it, if you can close that transaction. It's negotiable, but typically in today's LA market 2019, the buyer is responsible for paying for the professional appraiser to come out to the property, and it depends on which companies send out how big the house is that they have to appraise, but normally it's between $400 and $500. Make sure that your first offer is the highest and best offer you can make, because in the LA market where multiple offers are very common, let's say you and another buyer are competing for that one awesome home that you both want to buy, and you find out that the other buyer offered list price. They're offering $500,000 on a $500,000 home, and in order to beat them, you just have to go a little bit higher at $505,000. But you're like, no, I don't want to do that, and you end up losing out on that home. And a few weeks later, you're like, damn, I wish I went a little bit higher, a little bit stronger on my offer. We could have got that house. That does happen. And let me ask you a question, because as I said earlier in this video, for me, real estate investing is a long-term investment. It's a marathon. In 10, 15, 20 years, are you really gonna care about the extra $5,000 you put in to try to purchase that property? An extra $10,000 is about a $50 increase in monthly mortgage payments. So ask yourself, is this home worth an extra $50 in my monthly mortgage? And if the answer is yes, then just do it. Just go for it. As long as you're within your pre-approval budget, and that's why the very first step was to get pre-approved, as long as you're within that budget and you can afford it, why not? So at this point, it's really, really important to have an objective, solid real estate agent who's in your corner, who's gonna reel you back in, you know, if you get too subjective, too emotional in the process, because that does happen, right? Especially for our competitive clients, they're like, no, I'm gonna offer like 20 above asking, right? It's important to have that objective real estate agent to reel you back in, to make sure you're not going too crazy with the price, going too crazy with paying too much for that property. That's when having an agent in your corner really helps also. So I guess the moral of this part of the video is take your best shot the very first time. Make sure that first offer is the best and highest offer that you can make. And hey, if you lose out on that offer, if you lose on that home and you gave it your best shot, that's okay. Then you as a buyer don't have to feel that much guilt at the end. Be happy for the person who won that home. Maybe it's not meant to be, and I'm a big believer in that. If that house was meant to be mine, then it would be mine. All right, let's say you have your offer accepted. Congratulations, don't get too excited. We still have to do the inspections, and for the love of God, do the inspections. If there's something wrong with the house, make sure you know about it. That's the purpose of your inspections. Do your due diligence as a buyer. There are a lot of inspections that you can do, from general, roof, plumbing, soil, electrical, termite. Do everything that you possibly can to make sure that you're comfortable buying this property. If the roof is gonna cost you $10,000, do you really want to buy that house? This is part of the contingencies in the contract that I was referring to earlier. Make sure this contingency is in place, because this is another time when you can renegotiate the contract. If the roof is going to cost you $10,000, $15,000, you can bring that up to the seller and their agent. Say, hey, the roof is going to cost way too much money for us. Can you give us credit? Can you reduce the purchase price? You can renegotiate the contract, and that's super important. Now, every time you renegotiate the contract, you can potentially fall out of escrow. So make sure the request is reasonable. Don't complain about tiny cosmetic things like chipping paint. You could get the home painted for a couple $100. And chances are at this point, the seller probably has been on the market for 2-3 weeks, not including our escrow. Let's add another 1 or 2 weeks. And at this point, the seller probably just wants to close the transaction and just move on with their life, right? So at this point, they are more likely to kind of meet the buyer in the middle, to kind of say, okay, fine, we'll meet you in the middle to fix the roof or give you credit, or, you know, whatever the renegotiation is, they'll meet you in the middle. They're more likely to do that. Just be aware that you can potentially fall out of escrow. And just like the home appraisal in today's LA market 2019, the buyer is normally responsible for the inspection of the house, the general inspection. And depending on the company you use and the size of the home, it typically costs between $300-$400. Sometimes it's $200. It just really depends on the size of the home. Don't forget about the closing costs, and that's where we are at this point in the video. On a $500,000 home, you can expect closing costs to be about 2 to 3%, which is $10,000 to $15,000. Now, closing costs are the fees associated with closing the transaction when the title transfers from the seller to the buyer. In today's LA market, the buyer is typically responsible for closing costs, and we're looking at between 2 and 3% of the purchase price. So if you are buying a $500,000 home, you can expect between $10,000 and $15,000 of closing costs. Now, earlier in the video, I talked about how important credit score is. If you qualified for the programs, let's say you're part of that 7 and above club that I was talking about, you have good credit score at 760 and above, closing costs is a lot of money, $10,000 to $15,000. Let's say the lender that you're using is saying, hey, we're gonna help you out with the closing costs. We'll give you $8,000. Let's say your closing cost was $10,000 and the lender is giving you $8,000. You only owe $2,000 in closing costs because the lender is helping you. That's why it's really important to have awesome credit score. get your credit score up. Have a blueprint to get your credit score up. It's really gonna help. So in conclusion, congratulations, you closed on the home. The title has transferred officially from the seller to the buyer. Tap yourself on the back, have a glass of whiskey in front of the fireplace, if the home came with a fireplace, or you could just have a glass of whiskey. Guys, if you found this step-by-step blueprint to be very helpful, I know it's a long video, but I wanted to be as thorough as possible. If you found this helpful, please give us a like or a comment below exactly which part, which bit helped you out the most. Share this with a friend. Make it a great day, guys.